Students, you're welcome to today's class. And in today's class, we're going to be working on financial accounting, topic titled Source Documents. In the previous class, we looked at other topics like the trial balance, how to prepare trading accounts, and profit and loss accounts. In today's class, we're looking at source documents. At the end of the lecture, the students should be able to understand the definition of source documents, what source document is all about in accounting, and why it's important, and two, why source document is important, and three, the students should be able to understand 10 examples of source documents in accounting and how it can be applied in, or where it can be applied in the preparation of accounts. So we are going to be looking at the topic again, as we said, source documents. Source documents is the origin of the data applied in the preparation of accounts. In the previous class, we looked at the books of accounts as cash book, sales day book, purchase day book, journals, return inward, return outward, and ledgers. But in today's class, we're going to be concentrating on this area, on how source document can be useful in preparation of those accounts we mentioned. Now, let us look at the importance of source documents. It serves as a proof of data used in preparing the account books. 2, it provides a reliable information on the source of data. 3, it provides a acceptable evidence for legal proceedings to support a financial investigation. And 4, source documents are as vital as the air we breathe. In the time of legal proceedings against the accountant auditor, source documents are used as a proof of the reliability of the financial reports presented by an auditor. So let us look at the examples of what source documents. Examples of source documents: 1, we have receipts; 2, invoice; 3, tellers; 4, payment vouchers; 5, debit notes; 7, credit notes; 8, bank reconciliation statements; and we have fixed asset record and check stubs. These are the examples of what source documents. So let us look at how it can be applied. How will this record be applied in preparation of accounts? 1, we have receipts as a source document. Receipts are used in the preparation of cash books. So the origin of the information used in preparation, or data used in preparation of a cash book, is the receipts. And 2, we have invoice. We have invoice. Invoice serves as the source of information or data to the preparation of sales day book. Sales day book is a book of accounts. So the data we enter into sales day book is generated from the invoice. Then we have the tellers. Tellers are used in the preparation of cash book. They are used in the preparation of cash book. The tellers, they are used in the preparation of in the cash books. Then also we have payment vouchers. Payment vouchers are used in the preparation of ledgers. So the information data applied in the preparation of ledgers are extracted from the payment vouchers. And there's other source documents that can generate information for preparation of ledgers, but payment vouchers are one of the examples of the source document for preparation of ledgers. The next is what the debit notes. Debit notes simply means the notes issued by the supplier to the seller, indicating that the customer is still owing. He have not finished settling his account or account for the supply made to the customer. When a debit note is issued by the accountant of the company to the to the customer. It means that the customer is indebted to the company or indebted to the supplier. So debit notes is a source document showing indebtedness of a customer. So debit notes are used in the preparation of total debtors control accounts and sales record of customers. Now we have the credit notes. Credit note is used to record total creditors control accounts. Credit note is a source document used in recording of total customers control accounts. That is indicating that there is a amount standing to be paid, and that amount is regarded as liability because credit notes generate liabilities, and the liabilities are recorded in the current liability side of the balance sheet, while the debit notes recorded in the total debtors control accounts are recorded in the current assets of the what? Of the financial statements under balance sheets. Then we have the bank statements. Bank statement provide information for bank reconciliation and also provide information for entering charges from the banks or outstanding orders, or there's amount that have not been entered into the cash book, such as, let's say there is uncredited checks, standing order, direct debits, and bank charges. These amounts, the bank statement provide such data that will be entered into the cash book to enable you adjust the cash book properly, because the cash book is important to give you the cash balance that will be posted into the balance sheets under the current assets of the account. Now, let us look at the next item. Next item is the bank reconciliation. Bank reconciliation statement note is equally a source document that provides the items like direct charges. So direct charges in the banks, like the accountant is not aware there is a direct debit, or is not aware that some other items of discrepancy in the cash book from at the office. That this issue brings about monthly or quarterly or periodical bank reconciliation, because there are some checks issued but the customer have not presented it, and such you call it what? Unpresented checks. And we have some checks lodged into the account that have not been credited into the account. We call it uncredited checks, and there is a standing order, like some company gives or issues order or to the bank to make monthly payment to the insurance company to cover the companies against a perilous periods in some issues. So bank reconciliation notes helps to provide details of the transaction that are conducted outside the office of the business by the banks that the accountant needs to take into recognition in the preparation of the account. The next item is a fixed asset record. Fixed asset record gives a details of the depreciation charges for the period. In preparing accounts, you cannot prepare account without recognizing the depreciation charges for the period. That depreciation charges is a wear and tear of the asset of the business. The fixed asset or non-current asset of the business are subjected to charges because it has been applied in running the business, and the value do not increase but they depreciate. Because they depreciate, you calculate that depreciation value and pass into the account. So fixed asset record provide source information for the preparation of depreciation charges that will pass into the account at the end of a period. And also fixed asset record provide information to get the accumulated value or the net book value of the asset of the business that will be charged into the balance sheet of the business or the statement of financial, no, there's financial position of the business for a particular period. So on such a circumstance, there is a fixed asset record is very, very valid and important as a source document. So we cannot play with it. We cannot do without it. Then the next item is the check stub. Check stub, when a checks are being issued to the customers for a particular period, then we discover that the source of other source of information for the reconciliation of the bank statement with the cash book for at the end of the period, you can apply the check stubs in doing the reconciliation. Where there is no where there's no bank statement for the period, we can use the check stubs. Check stubs become the source document for the verification and clarification of the items posted into the cash books and into the account as an income or as an expenses of the business for a particular period. So when such transaction is conducted, it is expected that the accountant will look at the source document to generate the information that are reliable and acceptable and appropriate for the preparation of the account. And we listed the account books at the beginning of this lecture as the cash book, the sales day book, the purchase day book, the journals, the return inward, the return outward, and the ledgers. Those books of accounts cannot be prepared without a source document. So that is why source document is very, very important. I would like the student to transmit their questions and comments into the comment section. Thank you for joining this class. In the subsequent class, we will probably be looking at taxation, financial management, cost accounting, and advanced management accounting in some other subsequent classes. But in this class, if you have any question, please drop your comments and we can pick it up there and follow it up. Thank you and God bless you.